we'd started to see maybe a movement away, the fact that crypto had been relatively well bid while tech stocks had still been under some pressure.
Crypto has actually performed very robustly over the course of the year so far, this week notwithstanding, perhaps. I think it's taken a lot of people in the industry, both asset allocators and also builders, by surprise, and sort of a running joke in the industry has become, what bear market? It almost feels like we deserved much worse in terms of price action. So yeah, I would say overall, I think crypto has been very well bid over the course of the start of this year, particularly when you take into account the hangover psychologically, as you mentioned, from, of course, the FTX fallout at the end of last year, but also in the United States, the spate of regulatory pressure that the industry has been coming under over the last several weeks.
And we've heard time and time again, some of the frustration around that is a lot of it's backward looking, a lot of it's regulation by enforcement. Jill, when you're trying to build, when you are creating what Espresso Systems is all about, the infrastructure, how to transact, how to interact online, do you feel you've got enough guidance?
I would say yes and no. I think we tend to talk about, when we're talking in the media, about the government as sort of one monolith, and that's just not the case. I think you'll find that, certain agencies and certain departments within the U.S. government are very proactive in terms of being hands-on, working directly with builders. I would say the Treasury Department in particular has done a really good job of creating clear guidance and being very friendly to builders and innovators. I would say that other areas, though, of the U.S. government have been much more opaque in terms of what they want out of the industry. And it has been more regulation by enforcement, and that does create challenges. But that's just the U.S. government. One of the beautiful things, but also challenging things about cryptocurrency, of course, is that it's highly global. And so, it's a much larger chess game than just that.
Jill, you mentioned this week kind of being an outlier based on performance of different digital assets so far this year. But you probably heard me talking about this idea in the market that there's some caution which is impacting liquidity, or in other words, the kind of negative headlines that keep on rolling around this industry are, kind of directly inducing a liquidity crunch. Is that something that you're seeing?
It is a concern, I would say. But again, I think that for most people in the industry, it's been actually a pleasant surprise of how much liquidity is still sloshing around in the market, again, following the really serious fallout at the end of last year. And so I would say it is a concern, and certainly has been over the course of this week, and especially as people are keeping an eye on what the Fed is doing and as risk assets trade down more broadly. It is on people's minds, but at least from where I'm sitting, less so than I might have expected. And I think a part of that is also a lot of people in this market, a lot of both investors in this market as well as builders in this market, tend to take a longer term outlook and play less on the short-term time horizons of weeks to months. And I think that there's a lot to be bullish about, and therefore a lot that's keeping liquidity in crypto assets and in the system from, again, that much longer-term perspective.
With that in mind, you talked there about there being a lot to be bullish about. What are those things? I remember on a daily basis referring to Bitcoin as an inflation hedge, and we don't say that as much anymore. But I wonder, what are the underlying factors that long-term investors in different digital assets consider?
It's honestly, a lot of it is deep in the weeds infrastructure building that's happening. So just this week, Coinbase came out and announced that they were working on their own version of a layer 2 scaling solution for Ethereum. And so you can think of this as a layer that would sit on top of Ethereum that would make the underlying protocol more accessible, more scalable, lower fees, faster throughput, all of these complaints that users and developers have had for years about the issues in the space that are keeping it from being actually useful for mainstream applications outside of things like the inflation hedge story that the industry has been hanging its hat on for real use cases along the lines of payments and real financial infrastructure. And so it's been a lot of, again, deep in the weeds sort of technical development, R&D. It's not the kind of stuff, candidly, that's making headlines every day, but when you're in those weeds, it can feel very promising and very bullish. And a lot of investors in the space do spend time deep down those rabbit holes as well.
And you had been one of those investors and came across to sort of be one of those builders in those focus points for infrastructure. Tell us then what headlines should be being written. What is the decentralized application that we're going to be? Is it payment? Is it storage? Is it, where does it end up being practical in our everyday, do you think, most swiftly?
Yeah, well, I mean, to answer your first question in terms of the headlines that should be being written, I think that this layer 2 story around Ethereum scaling, again, that means lowering fees for end users, and that means faster transaction rates, higher throughput, all of these types of things. That is a major story that I think that should be written. Of course, there was a lot of attention last year to the upgrade of Ethereum to move it being proof of work, which of course was very computationally intensive and also very bad for the environment. I think that if part of Ethereum's bid over the course of the beginning part of this year has actually been following on from, again, that sort of deep in the weeds infrastructure work. And I think we've yet to see, Caroline, what applications will end up coming of this. We're really in like an infrastructure building phase for the industry, as opposed to an application building phase as of right now. But I personally am very bullish on the payments use case. It's been sort of the holy grail of cryptocurrency, even going back to Bitcoin. That was sort of, you know, the original vision of Bitcoin that we've yet to see come to fruition. But looking around at the infrastructure being built, I really do think it's happening this time.
Jill, really interesting that you end on infrastructure. There was a headline that crossed the Bloomberg terminal this Friday that caught my eye coincidentally about Puerto Rico giving basically tax support, tax breaks for blockchain developers. And the reason I bring that up is that we're trying to gauge, Caroline and I, about how supportive the United States is as a place to foster the underlying technology, as a regulatory environment. And all the headlines this week, and with that in mind, what's your assessment about the health of this industry in America right now?
I'll be honest, I think it's a challenge for the United States, and I think that it's a challenge that the folks in DC are doing well to start paying attention to, and I say that in the present tense because I think many of them are. One of our investors, Electric Capital, they put out a developer report every year, and overwhelmingly, what was notable to me on this developer report this year was the exodus of developers who are domiciled in the United States versus in other parts of the world over the last 2 to 3 years. And I think a lot of that does come down to the regulatory environment here. But, you know, there are those of us who still feel strongly about being U.S. domiciled companies, about building here, despite, you know, the headwinds that brings to us, and about working directly with regulators and policymakers and even enforcement officers in Washington to make sure that we're building things right. There are still many of us, but it hasn't been easy, and it does only seem to be getting harder. But again, kudos to those in Washington who are paying attention to this dynamic and are fighting to keep the innovation onshore in the U.S.